Are you currently running a consulting business or thinking of launching one? Do you want to grow your business and run it more efficiently? I'm Mike Figliolo, Managing Director at Thought Leaders. I've worked for a major consulting firm, and I've run my own firm for the last 14 years. In this series, I'll offer some of my favorite tips for how you can grow your business more quickly, run your firm more efficiently, build stronger client relationships, and effectively plan for your future. I look forward to sharing a new tip with you every single week. When you run a consulting firm, you have to answer one very important question. What makes you special? If you can't articulate what sets you apart from all the other consulting firms out there, you'll be hard-pressed to win business away from them. You're going to have trouble winning the bid when other firms are in the mix. Have a clear statement about why you're differentiated. It's that differentiation that will enable you to compete on quality instead of being in a race to the bottom on price. I run a leadership training firm. The thing I say differentiates us is all of my instructors are practitioners, and everything we teach is immediately applicable. The way I position that with my clients is, since my instructors are practitioners, we can deliver better training than people who are academicians or career facilitators. I often ask my clients, hey, you know what? Why don't you go ask for the resume of the person who's going to be on the podium? Because, by the way, here's the resume of my instructor that I'm going to put out there. We win that business most of the time. We also have an ability to differentiate on blended learning. The video-based training courses that I deliver along with my other instructors are something that sets us apart. Not a lot of other training firms have the capability we do. That enables us to differentiate our offering versus our competitors. Think about things you can differentiate on. Some things to consider are your consultant's special expertise in an industry or a specific functional area. Maybe they know everything in the world about mergers and acquisitions. Maybe they're an expert in the metals and mining industry. You can differentiate based on licenses and certifications that you hold. Those take time and money to earn. When your people have them, that can be a differentiator. You can also differentiate on access to intellectual property or proprietary methods and models that you've built. You spent a lot of time creating that intellectual capital. Let it set you apart from your competitors. Just take a moment and ask, what makes you different? Why should the client choose you over someone else? Client relationships are the lifeblood of your business. Be deliberate about maintaining them. Regular contact will keep you top of mind. Beware of excessive contact. They're going to ignore you or block you if you're in their inbox too much. Find excuses to reach out to them, like, hey, I read an article and I thought of you. Or I heard about a cool new technology and I thought you might be interested in it. Send these notes and leave it at that. Don't try and sell during those interactions. They know you eventually want to sell them something. Just focus on being helpful and good things are going to come. I have one client who has had a great relationship with me over the years. Every once in a while, I'll see something that I think would be interesting to him. And I drop him a note and I said, I read this, I thought of you. And he always writes back and says, not that you're trying to sell me something. He and I both know the deal here, but I'm trying to be helpful and I stay top of mind. So anytime he has a need that my firm can fill, he's going to call me first. Some reasons you might want to reach out to connect with your clients and prospects include things like you have a new service offering and they might be interested in it. You know a candidate who might be a great fit for their organization. Maybe you read an article about a topic they're interested in. I tend to stay away from personal stuff in terms of reaching out. Things like anniversaries or kids' birthdays can get a little bit tricky. It can get very awkward if you congratulate somebody on their anniversary only to find out that they were divorced recently. Try to keep your outreach focused on professional topics. Articles about topics they might find interesting, new technologies, new books you've read, those are all perfect excuses to reach out to a client and reestablish that relationship. When you want to grow your consulting firm, you're probably going to have to bring on additional people. There's only so much of you to go around. Make deliberate choices about whether the people you bring on will be contractors or employees. Ensure that individuals' interests are aligned with yours. If you're going to bring on contractors, you don't run into all the employment and tax issues, and they're going to be a more flexible workforce. The downside is they can leave suddenly, and they don't always share your personal interests. If the people you bring on are employees, they're dedicated to the work, but they come along with a lot of administrative issues you're going to have to deal with. If you need someone who's fully committed to building your firm, but that person's only interest is part-time work to supplement their income, you're not going to be happy with that result. Ensure interests are aligned between you and the people you bring on. A lot of times I get people who say they want to work with me, and we run a training firm. They'll tell me, well, Mike, when you can't do the training session, just throw me that gig. The problem is I don't need people for bandwidth to do the training. I need salespeople. That relationship won't work out, so I have to hire different people. I've chosen a structure where I have contractors. I don't want to deal with the overhead. I don't want to deal with the administrative issues. That's great that I have contractors because I don't deal with those issues. The downside is sometimes I struggle to get my contractors' attention and have them focus on building my business versus other interests they're pursuing. Know the different benefits and drawbacks of contractors and employees. Make sure you choose deliberately to drive the outcome you're looking for. Pricing is one of the most powerful profitability levers that you can pull. A 1% pricing increase on the top line has a huge profit impact on the bottom line. Let's look at an example of a business that has a 20% profit margin. A 1% increase on the top line results in a 5% increase on the bottom line. Every penny of that 1% increase on the top will drop straight to the bottom. And that business will go from a 20% profit margin to a 21% profit margin. That's a 5% increase in total profitability. You need to understand your rates relative to the market and be willing to take pricing when you have an opportunity to do so. If you don't, you're going to find your business falling behind in terms of your rates. When you do take pricing, be clear and confident. Have a solid rationale for taking pricing. That rationale can be as simple as, hey, it's been 4 years since our prices have increased. We're moving to a level that's going to be more in line with the broader market, as well as in line with the value that we know we're delivering to your organization. You can increase pricing by changing your pricing structure. If you had a daily rate, maybe you can move to an hourly rate. If you have an hourly rate, maybe you can move to a daily rate. And as you make that switch, look for an opportunity to increase your total rate. If you charge by project, maybe you can charge by unit. If you charge by unit, maybe you can charge by project. For example, my firm does some executive coaching. In the past, we've offered these coaching services at an hourly rate. Recently, we've looked at it and said, well, you know what? We're not getting what we want with the hourly rate, so maybe we need to move to a project-based rate. We're now selling those engagements as long-term engagements for 3, 6, 9, or even 12 months. And in the process of doing so, we've been able to raise our rates versus that hourly rate we were charging. Understand your rate structure, understand when you have opportunities to raise pricing, and think about creative ways you can do it in a manner that is still consistent with the value you deliver to your clients. When you run a small consulting firm, it's easy to focus on selling the person and emphasizing that consultant's experience and credentials. That approach can create issues for you. The problem with that approach is it makes it hard to scale. Instead of selling that consultant's experience and credentials, try focusing instead on selling the benefits of your services. When you focus on the consultant's experience and credentials, you may run into a situation where the client wants that person and that person only. I've had situations where my clients have said, hey, can we get Mike because he wrote the book? What I then have to tell them is, let's focus on the outcome of the session so I can put a different instructor on the platform that day. Other situations I run into where I'm selling the instructor's experience instead of selling benefits is a client takes the other approach and says, well, Mike is really expensive. Can we get a cheaper instructor? Again, in that situation, they're focused on me and my experience and the experience of somebody else versus the benefits of the service that we're selling. One way to break out of this dynamic of focusing on the individual's capabilities is instead focusing on your pricing strategy. One technique to consider is having the same pricing structure for all your consultants, or at least have consistent pricing by capability band, like all your analysts, your managers, and your partners are priced the same. That helps you focus the client on benefits instead of how much one individual costs. Sell your services and solutions that drive specific benefits instead of selling expertise. What that looks like is instead of saying, I know more about widgets than anyone else in the industry, say something like, we can help you make your widgets 20% more efficient. The client is then buying a benefit instead of buying an individual's expertise. The more effectively you can differentiate between the benefits you're selling a client versus the experience and expertise of the person delivering the service, the more easily you're going to be able to move staff between projects and get your client to focus on what matters most, which is the service you're delivering and the benefits they're going to get from it. Your intellectual property is one of your greatest assets. Those assets go to waste if you have difficulty finding those assets or accessing them quickly. Put a document management system in place and stick to it. It doesn't have to be fancy. You can sort your documents by client, by engagement, by topic, or even by consultant. Although I don't recommend that last approach because consultants work on multiple engagements and people come and go from jobs. Use a document taxonomy based on clients and content if you're managing multiple client engagements. Also use a standard naming convention to make it easier to find your documents. In our organization, we serve multiple clients and we serve those clients on multiple projects over time. The way we sort our documents is first we sort by client and then we sort by engagement. We also have multiple courses, and for each of those courses, we have multiple versions. We name our courses by date. It makes it easier to find the most recent version quickly. Make sure your whole team adheres to the naming conventions you use, and they follow the filing rules. It makes the team more productive. You don't end up with the dynamic of, hey, can somebody please clean up the L drive? We've all faced that dilemma where you have a shared drive and people dump documents in there, they don't organize them, and they don't name them correctly. The problem that results in is you can't find what you need when you need it. Putting in place a good document management system makes it easier for the consultants on your team to be much more productive. Also, as you think about your documents themselves, use a standard firm format for your slides, for your memos, and any other document you're creating. It makes it easier to pull content from one document and put it into another. It helps your team collaborate more effectively. When I was a management consultant, we had a very strict, firm format for the slides we were creating. What was great about that was I could take slides from a team in India, a team in Germany, and a team in the US and pull the relevant slides into a new presentation, and it was seamless. It made my team so much more efficient because we weren't spending time reformatting slides from everywhere else in the world. The more rigorously you think about document management, the more effective and more efficient your team is going to be in terms of filing and finding your information, as well as creating new content. Clients hire you because you're an expert in your particular subject. You need to keep your knowledge fresh to stay ahead of your clients. Read blogs and news feeds, attend conferences, network with other people in your field, follow social media accounts of key influencers. Be sure to read outside your industry or area of expertise. That will help you spot trends that might eventually affect your industry or your clients. For example, if oil prices are dropping or rising, that might have an impact on your client's business. With all the stuff going on about privacy rights for consumers, that's probably impacting your clients. Know what those trends are and think about, how's this impacting my client? Some tips I use to stay ahead of these trends are creating a curated list of news feeds. I arrange them by topic and read them regularly. Make a list of books you want to read over the course of a year and stick to that commitment. Find interesting podcasts. Listen to them while you're spending all that time at airports waiting to go see a client. Get on mailing lists for conferences and networking events. Attend them. By the way, these are often great places to meet new prospects and clients. The more effectively you stay ahead of trends, the more effectively you're going to be able to serve your clients on their most pressing issues. You never know where your next client might come from. It may be a LinkedIn connection request, could be an old college classmate, might be a friend of the family, or even your seatmate on an airplane. Some tips I'd like to share in terms of finding these clients include things like go where your clients are. When I travel, I pay for a first-class upgrade, or I use upgrades that I've earned. I'm having a very different conversation with a vice president of a large corporation up in first class than the conversation I'm having with a person next to me with a screaming toddler on their lap back in seat 23C. Talk with people at your hotel bar or restaurant. They're traveling for business. They work for organizations that might become a client. When you're serving clients, eat in their dining facility. Don't go off-site. I have a couple of clients where everyone in the organization eats in the dining facility. I sit just past the registers. So when people get their food, they pay at the cash register, and they walk out looking for a seat, there I am. I've sold many engagements that way because I bump into people there. Consider joining some LinkedIn groups for your industry. Get to know other players who have the same interests you do. Consider attending local networking events, conferences, and presentations being given by experts. When you are looking for these additional opportunities to generate new clients, listen to people. Learn about them. Express genuine interest and curiosity about their work. You might be surprised by how many opportunities are all around you every single day. When you're having these conversations, ask lots of questions. Don't push your services right out of the gate. Genuinely show interest in the other person. Don't worry, they'll eventually ask what you do. The better you know what they do and what they're interested in, the more likely it is you're going to be able to position your services in a manner that they'll find interesting as well. Partnering with other firms is a great way to build your firm's capabilities without developing those capabilities yourself. If you pick great partners, you can deliver a broader suite of offerings to your clients. I run a leadership development training firm. I don't go out and write all the content myself. I found some great instructors who are wonderful partners. They bring their content to my firm, and we collectively deliver that content to a broad base of clients. Now, partnerships can cut the other way, too. A bad partner that doesn't do great work or doesn't work well with your clients will reflect poorly on your firm and hurt your brand. I had one situation where I was evaluating a partner. He and I didn't see eye to eye on the best way to serve clients. I did not pursue that relationship any further. Look for partners with complementary products and services. Make sure you minimize your competitive overlap with their services. Where there is overlap, clarify for both of you how you're going to resolve it. I have one instructor who delivers keynote presentations and training courses. He and I have both agreed that he'll deliver his keynotes under his own brand, and all the training courses will be delivered under my brand. Be explicit about the partnership arrangement. Is it going to be contractual? Will it just be a handshake? Be clear about the expectations of one another and how the benefits of that partnership are going to flow. If a partnership isn't working out, end it. Running your own consulting firm should be fun. If a partner's frustrating you, it's time to fix things. If things can't be fixed, move on. If the relationship is one-sided, that's a pretty big hint that it's not going to be a good relationship. Partnerships are an awesome way to grow your business and deliver better services to your client. Be mindful about how you set the partnership up so it's going to benefit both parties. When you're a consultant and you don't have vacation days listed on a pay stub, it's easy to forget to take time off. When it's your business you're running, it may feel like you can never take time off. It's up to you to build that into your schedule. When a project ends, take a few days to catch your breath. Set aside time on your calendar at the beginning of the year and schedule projects around that time off. One of the biggest risks entrepreneurs face is burning themselves out. I've run my business for 14 years. I've burned out really hard twice. I've had 2 heart attacks. That's not a sustainable model. Now, I've gotten a lot better at building that time off into my schedule. I'm taking better care of myself. Time off can be something like a full vacation, or it might just be a nap on a Tuesday afternoon. The important thing is that you plan for it and put it on your calendar. Put that time on the calendar far in advance. Protect it no matter what. Plan your work around those dates off. Set projects to end before the time off, or don't start a new project until you've completed your time off. And when you have situations where the work needs to get done and it's in conflict with your time off, have the other members of your team cover for you while you're getting your rest. Performance can really drop if you just try to bull through it. You'll be more efficient and effective if you're rested and relaxed. I have one individual who I serve as an executive coach. She was burning herself out badly. She couldn't catch up. The quality of her work was dropping, and she was really unhappy. She and I talked about putting time on her calendar on a regular basis and protecting that time, getting that time to catch her breath. She instituted the practice and is being much more rigorous about holding that time aside. And guess what? Her performance is improving and she's happier in her job. When you run your own consulting firm, you're the only person who can protect that time. I encourage you to get out that calendar and block some time for yourself right now. Going into business with friends can be exciting and fun. It can also ruin a friendship. They often say, good fences make for good neighbors. You might want to skip putting a formal agreement in place because you're friends. What could go wrong? But when things get challenging, you'll wish you had an agreement in place to help resolve any differences. This agreement becomes that fence. You're better off going to the trouble of writing an agreement which will protect both your business and your friendship. A lot of agreements require attorneys. Attorneys can be expensive, but you can save on the cost of creating these agreements in multiple ways. First, both of you can agree to use the same attorney. That can reduce conflict in the process of writing the agreement. You can split the costs of the agreement between the two of you. If you don't split the costs, you might resent that other partner when something goes wrong. I had one situation personally where there was a guy who I had been friends with for a long time. He started his own consulting practice, and we decided we were going to refer work to one another. I went to my attorney. I had them write up a partnership agreement. It cost me $1,400, but I figured we're going to be working together a lot. About a month later, this guy took a job at another large corporation and he shut down his consulting firm. That was $1,400 of wasted effort, and it all came out of my pocket. If we had split the cost, it would have been a better outcome. When you write the agreement, write it so it can be used in multiple partnership situations. If you run your business for a while, you're going to have a lot of potential partners. You can use that same agreement over and over. For my firm, I bring in instructors all the time. Every single instructor uses the same agreement. I've saved a lot of money by duplicating that work. When something goes wrong, you're going to be very glad you have an agreement in place when you actually need it. I had one situation where something went sideways with one of my instructors. It was not a good situation. We had been friends. The good news is we had put in place an agreement that was fair to both of us. And when I needed to terminate that agreement, it was pretty clear what was going to happen. Working with your friends can be awesome, but it can create a lot of challenges along the way. If you spend the time and a little bit of money to put a fair agreement in place up front, it's going to help you maintain your business and your friendship so that you don't have any issues along the way. Many consultants travel a lot. Travel can be a blast, or it can be a nightmare. To improve your travel experience, join loyalty programs for hotels, airlines, rental cars, credit cards, and other things you spend money on. Loyalty programs can have a huge impact on your lifestyle, your durability, and your performance as a consultant. Your class of service drives your comfort and your performance when you're with the client. Do as much as possible to maximize your loyalty relationship. There's a big difference between flying economy class, getting into a tiny rental car, and staying at a noisy hotel room by the elevator where you're up all night from all the noise, versus getting upgraded to first class, getting in an upgraded car, and getting an upgraded hotel room on the top floor where it's nice and quiet. And oh, by the way, earning a bunch of points toward a well-deserved vacation. This is also a huge impact on your performance at the client. Some tips I've found over the years in terms of these loyalty programs include things like airline, hotel, and rental car memberships are a must. And by the way, stay loyal to one or maybe two programs. Credit cards help you multiply your points when you use them with an affiliated brand. Pay attention to promotions and sign up for them. A lot of the loyalty programs I'm a member of run things like double points or triple points, but you have to sign up. Know all your program's benefits and use them. Things like being able to stand by for a flight, get upgrades, get a 5th night free when you book with hotel points are all great benefits, but you have to know what they are. Things like PreCheck, Global Entry, and other trusted traveler programs will also speed you through the airport and decrease your stress. For me, these loyalty programs matter. I got all my upgrades to come out here to California and shoot this course. It made travel a breeze. Spend the time understanding your loyalty programs. Invest the time and energy in maintaining them. You're going to be happier, have a better travel experience, and do better work for your client organizations. A blog is a great vehicle for getting your thoughts out into the market, building a brand, and generating awareness for your firm. If you're going to blog, you have to commit to it. You'll need a consistent publishing schedule, regular topics, and a solid distribution platform in the form of multiple social media accounts. Pick a set of topics and stick to them. Give people consistent content. Decide on a publishing schedule and make it a priority to adhere to it. I feel a little guilty right now. I haven't written our blog post for this week. I'm going to make sure I do it tonight. Link your blog to your social media accounts to get distribution of your content. Get people sharing your work. Consider accepting guest posts onto your blog. Those guest posts expose that author's readers to your blog and can grow your base of readers. Remember, your blog is a sales tool. Link it to your products and services. Highlight things like your books, your consulting, training courses you deliver, and videos you sell. Just make sure you do so in an unobtrusive way. For my blog, it's been a great tool. We've been writing it for over 10 years. Recently, one of my instructors wrote a guest post on leadership resilience. A client I worked with a long time ago read that post. He called me up and said, "Hey, I just read that post. I think it was great. My team needs help with that. Can you folks come in and help?" It was a pretty easy sale from a piece of content on our blog. Think about how your blog fits into your sales and marketing strategy. It can be a great way to build awareness for your services and bring clients in the door. At some point, you may decide you want to hire a salesperson for your firm. Consultative selling is different than selling products. The salesperson must understand the client's needs, how your services meet those needs, and be able to articulate the value your services deliver. The salesperson has to be a problem solver, an attentive listener, and a relationship builder. When interviewing a salesperson, make the first question you ask, "What do you think of our business?" Just leave it open-ended. If they can't explain what you do, what services you offer, and who you serve, they haven't done their homework, assuming all that information is available on your website. That's an indicator they won't do their homework about your clients before that sales call. I had one individual who was trying to sell me services. They set up a coffee, and when we sat down, they said, "So Mike, tell me about your firm." I said, "Well, what do you want to know?" They said, "Well, what services do you offer? Who are your clients? And what are your instructors like?" All that stuff was available on my website. This person had done zero homework about my business. They didn't get the sale. When you're looking at a salesperson candidate, ask them, how would they sell your services? Role play a client interaction. If they start by talking about your firm and its services and how great they are, they're not likely a consultative seller. If instead they start by asking questions to understand your needs, they could be a good candidate. If they then offer a solution targeted at your needs and emphasize its benefits, I think you have a keeper. Companies choose consultants who are experts in their field. Books, white papers, and other types of content are powerful ways to showcase your expertise and demonstrate credibility. When a major publisher decides to publish your book, or a reputable and widely known website or magazine carries your white paper, it comes across as an endorsement of your work and its credibility. Now, not all publishing is equal. There's a big perceived difference between being self-published and published by a major publishing house. The same holds true for articles you write for journals or websites. Look, you don't make money writing a book. The same holds true for white papers. You have to understand that they're a business development tool. The first book I wrote did pretty well commercially, but the money wasn't huge. If you're writing for credibility, the more credible the publishing source, the more you benefit from that perceived credibility. That's one reason I love filming these courses. I essentially get LinkedIn's seal of approval, and they publish my courses. That's a huge differentiator versus my competitors who only have their homemade videos that they're hosting on a major hosting site. When you think about your content strategy and what you're going to publish and put out there, think about where you're going to place it. Because if you can get that seal of approval from a very credible source, it's going to make your expertise appear that much stronger in the market. Every consultant wants to land that big whale of a client, but selling to big clients is hard. Many big companies have supplier diversity programs where they look for small businesses to work with. Ask your clients and their prospects if they have these programs. If they do, make sure you enroll in them. There are other ways to get into big companies. You can also focus on selling a small project to a small group or department, and then grow from there. Once you can tell somebody at the organization, hey, we've done work with this other department at your company, it makes getting the next engagement that much easier. Consider doing your first project at a reduced rate, just to get in the door and be able to have their logo on your website. Sure, you might lose money on that first project, but it gets you in their system as a supplier. It gets their logo on your website. When their colleagues go to your site and they see their company has already used you, they're much more likely to use you again. When you start working with a large client, try to get a master services agreement in place as soon as you start working with them. Look, it's a painful process. And if you never get additional work at that client, it's a big waste of time. But if you have a master services agreement in place, it makes it easier for other groups in that organization to bring you in. They don't have to go through the pain of them walking you through the MSA process. That follow-on work will be much easier to land. What's really important with big clients is finding some way to get an initial toehold and get in the door. From there, it's much easier to expand your relationship quickly. Big companies have big expectations of little companies like yours. They may want excessive amounts of insurance, complex security and safety procedures, ominous employee screening programs, and other requirements you're not equipped to handle. It's okay to ask for exceptions to these policies. You can get them if you can show how the big requirement isn't applicable to the work that your small firm does. I had one client that wanted us to provide $5 million worth of liability insurance. That was ridiculous given we only do on-site training programs that last about a day. When I pointed out how that requirement was too big relative to the work that we do, they were amenable to reducing that amount to $1 million of liability insurance. I had another client who said, we want a rigorous non-compete in place. They listed out all the companies we would no longer be able to serve. A lot of them were existing clients of ours. We pushed back on the requirement and said it didn't make sense, and they removed that list. I had another client that wanted comprehensive background checks on every member of my team. When I pointed out that only one of my team members would be serving that client, we got the requirement waived. Workers' compensation insurance is always required, but if you're a sole proprietor, it's not necessary. Again, see if you can get this requirement waived. Remember, everything is negotiable. While there may be no discretion on some of the items in your contract, other requirements can be reduced or removed. You just have to ask. Decision makers and buyers are hard to reach. There are multiple layers between them and you. If you can't get to them, you can't make the sale. Some techniques for getting to them include getting to know their assistant. They're the gatekeepers to that stakeholder's calendar. If that assistant can tell that you're not a hard sale and a pushy salesperson, they might let you pass. Send the person a book or an article of interest. These buyers and executives will respond with at least a thank you. That can lead to a follow-on offer to meet. Schedule a meeting to get to know them, and don't try to sell any services during that meeting. Focus on building a relationship and helping them before you're putting your services in front of them. When you're meeting with folks, make it convenient for them. Go to their office, meet near their home or work, or on their route to the office. Do it at a time that's convenient for them, even if it's not convenient for you. And remove the sales pressure. They know why you're calling on them. No one likes a hard sell. If you focus on making it easy for them to meet with you and making it a pleasant exchange where you're not pushing your services on them, you're going to be able to build a relationship that will result in those long-term sales. When you're running your own firm, it's a good idea to set up a separate savings account for withholding for big items. When tax time comes around, you'd better have the cash available to pay. Set up a tax withholding savings account. When you receive a client payment, put an estimated amount directly into that reserve account. Build a spreadsheet or work with an accountant to estimate how much you're going to need to pay in your taxes. I have a model that I use to calculate that liability. When I sell a new engagement and I get a payment in, it goes into the spreadsheet, and that spreadsheet then estimates for me how much I owe in federal, state, and local taxes. I then set that money aside so I can pay those liabilities when they're due. The other nice thing is you can earn interest on that money until it comes time to pay those taxes. That reserve account will also ensure you don't get caught short when it comes time to pay. Make sure your funds are quickly available. Have this savings account linked directly to your primary checking account. Also make sure you're not commingling business funds and personal funds. It's going to make your taxes easier to do. You can always use the account for working capital too. Having that cash cushion for when times get tough can prevent you from having to do difficult things like cutting your prices. Think about what liabilities you're going to have and make sure you account for it and set that money aside so you can handle those obligations when they come up. While conducting sales and business development activities, people might not be willing to set up a planned meeting with you. However, they're often very willing to meet with you if you just happen to be in the neighborhood on short notice. When you're traveling, this is a great way to get meetings that have been hard to come by. You can do this to manufacture these situations by planning a trip to a specific city. I have one member of my team who's great at this. He decided he was going to go to New York. He then called about 20 different prospects and said, "Hey, I'm going to be in the city on these dates. Would you be free to meet?" A lot of them were busy. But what was really cool was they said, "I feel bad, I'm not going to be in town, but you know what? Let's set up a call. I'd love to talk to you again." He generated like 10 sales calls just by setting up that trip to New York City. Even if people don't meet with you, they're going to be open to that call since they can't meet, or it may prompt them to remember they need something from you. Make it easy and pleasant for people to meet with you. Go to their office, eat near their home, eat on their route to work. Make it at a time that's convenient for them. Take them to their favorite restaurant. Selling requires an investment of time and money. These expenses are almost always tax-deductible business expenses too. Ask your accountant. The more pleasant it is for these people to meet with you, the more likely it is they're going to take the meeting. These types of meetings are a great way to spend time on a lonely night, and instead of eating room service in your hotel room, you can be out with a client or a prospect having a great meal and building that relationship. As a consultant, one of the most critical decisions you have to make is setting your rate. It may feel awkward because the number might seem really high. But remember, you have to cover a lot of costs that were previously covered by your company when you were employed. To set your rate for hourly work, take your annual total cash compensation, which is your base salary plus your bonus, divide that number by 250 days, divide that number by 8 hours, and then here's the important part, multiply that number by 3. That will give you your hourly rate. Let's say you made $150,000 as a base salary, and you got a bonus of $17,000 a year. Your total cash compensation is $167,000. Divide that number by 250. That comes to $668 as a daily rate. Divide that number by 8. That's $83.50 an hour. Now, multiply that number by 3. That gives you $250. That's your hourly rate. That hourly rate accounts for time you won't be billing clients. That includes vacation time, sales time, and administrative time. That number also factors in the increased taxes you might need to pay when you run your own firm. If you price too low, you're going to do too much work for too little money. To get comfortable with this hourly rate, take a look at what other consultants in your field charge. I wouldn't be surprised for them to be in that comparable range. Setting your rate is a critical decision. Get comfortable with this larger number because you have to account for all that time that you're not getting paid. Prior employers can be easy clients to land. They know your work, they know your expertise. They may be willing to bring you on as a part-time subject matter expert. Make sure you have a clear contract and rates in place before beginning work. They're going to try to get as much value out of you as possible and do so for as little compensation as they can get away with. A contract gives you the ability to charge a fair rate for the work you do. In most cases, the work you do for this client is going to be considered work product that they own. This won't be an opportunity for you to build your intellectual property to build your consulting firm. These clients may revert back to treating you like an employee. Be sure to keep it clear that it's a client-consultant relationship. If they ask you to spend more hours on a project or redo work, be sure you get paid for it. These clients can serve as a great reference client, which is going to help you sell to other prospective clients. Continue selling new clients while you work for your former employer. If you don't, when the engagement ends, you're going to find you have a gap in work to do and correspondingly a gap in income. Prior employers can be a great place to start your consulting business. Just make sure that you treat them like the client that they are. Writing proposals for clients takes a lot of time. You're also not getting paid for doing it. Create a standard proposal you can use for all your clients and all your projects. Have sections of the proposal that you customize depending upon the project or client. These standard proposals give you consistency. They ensure you don't forget important information. And they make getting proposals sent out much faster. That can make all the difference on a sale. Our firm's proposals have standard sections that never change and custom sections that we alter based on the engagement or the client. The standard sections include About Us, descriptions of each training course we offer, our instructor bios, our list pricing, and our contact information. The custom sections include the client logo, the client's needs, and any special pricing that we're going to offer. For us to build a proposal, we add the client logo, we describe the client's needs, we delete all the irrelevant content like courses we're not proposing or instructor bios for people who aren't going to be involved in the pitch, and we make any special pricing notes. We can get a proposal out the door in 15 minutes. This blows our clients away. By building a standard proposal, you're going to see a lot of benefits in terms of consistency and get huge effectiveness benefits because you're getting that proposal out the door pretty quickly and the client can make a decision like that. Whether it's blogging, posting on social media, building your website, or creating client deliverables, it may be tempting to use photos, songs, videos, or articles that you find on the internet. Just because it's out on the internet, it doesn't mean someone doesn't own it. Secure permission before using these works, especially photos. If you infringe upon someone else's copyright, that can lead to very large fines. Those can be avoided by buying an image for a few dollars. If you have content on your site that belongs to other people, take it down and replace it immediately. Delete copies of that content from your server's media library. Early on, when I was running my firm and started my blog, I made one of these mistakes. I used an image on our site that was copyrighted by someone else. Eventually, I got a letter from their attorneys demanding that I take the image down and that I pay them for damages. I wrote the check. It was their work. It was the right thing to do. I immediately took down any other infringing photos that we had and made sure from that point forward we were acquiring the rights to anything we were putting on our site. When you buy your images, buy them from reputable sites. Track where you got each image. Add a URL to the image's comments section so you know where it came from. In case somebody comes to you and says, hey, that image is copyrighted, you can show that you actually purchased the license. You can also find content on royalty-free sites like Wikimedia. Google yourself. If people are stealing your content, email them a takedown demand. You can use the Digital Millennium Copyright Act to get your work taken down from infringing websites. This is a law that enables content owners to request that their content be removed. A lot of times I'll Google myself and I'll find these courses on other people's websites. They're offering this content for free. That's a violation of copyright law, and they get a notice from the legal department saying they have to take that content down. If you're going to use content, make sure you have the rights to use it. Think about the situation if it was reversed. Would you be happy with somebody stealing your content that you work so hard on? If not, then don't do it to someone else. Ensure your sales compensation plan drives the behaviors you want. If you have a commission model based on the number of sales your people make, you're going to get a lot of small sales. If you have a commission model based on total revenue dollars, you may get large sales, but it may be very unprofitable work. If your compensation model is based on project profitability, you'll have accounting and reporting arguments over what's included or not included in the project costs because that impacts the salesperson's commission. Keep the compensation model simple. Avoid exceptions at all costs. And know what behaviors you want to drive. One exception leads to another, leads to another. And when that exception is in the salesperson's favor, they want the exception. When the exception wouldn't be in their favor, well, then they want the contract rate. At my firm, our model is a salesperson gets 20% of the revenue they generate. I do this because most of my instructors and salespeople deliver the revenue that they sell. I want them to have an incentive to sell many large projects. The bigger the sale and the more sales they make, the more money they can make. I don't worry about unprofitable work because of my cost structure. We have minimum project prices, and I have a fixed cost structure for each project because I'm putting one instructor on the platform to teach for one day. The reason I use a big number like 20% is I want to drive as much top-line growth as I possibly can. I make it very lucrative for the members of my team to go out and sell that work. When you're setting your compensation model for your salespeople, take the time to think about what are the behaviors you want to drive and what's the right commission structure to drive those behaviors. You need to understand the difference between work product and owned intellectual property. Work product is anything you produce specifically for the client. They own it after the project. You have no right to it unless that's specified in the contract. Your intellectual property remains yours to use on other projects as long as you protect it in the contract as pre-existing work, or define it as something you can use going forward after the client engagement. Understand the differences between these two, work product and owned intellectual property. If you don't, you could lose the rights to some of your most valuable assets. For example, for my firm, we teach leadership training courses. We specify in our contracts that the content from our training courses is our pre-existing intellectual property, and none of those rights are going to transfer to the client. We also do some limited consulting work. We've done work for one client where we wrote their strategic plan. That strategic plan was work product. The client owned all rights to it after the engagement, and we had no rights to any of that content after the engagement ended. Here are a few ways that you can protect your intellectual property. Put pre-existing intellectual property clauses in your contract. Insist that those clauses are in the contract or you won't sign the agreement. Mark all of your intellectual property as proprietary, every single page of it. Specifically call out intellectual property in your contract. For these courses, when I teach a course based on our intellectual property, the contract I have specifies that we retain the rights to that IP. Apply for copyright protection. Talk to an attorney who understands copyrights and intellectual property to find out how to protect yours. You need to understand how to protect your intellectual property and prevent it from becoming work product. Your IP is one of the most valuable assets you have. Protect it at every turn. Consultants meet people in different companies and industries through interactions with clients, suppliers, and partners. Your network has value if you use it well. Be a connector. Introduce people to each other. You're adding value to all of those relationships. You'll tend to be the first person people come to when they need help. This includes them coming to you when they happen to need services like the ones you provide. They'll also become a great source of referrals to you because they're trying to return the favor for all the great connections you've made for them. I had one individual who was a CEO of the client organization I served. I worked with him for a while until he left that company to go start his own technology startup. When he did, I introduced him to a technology developer, I introduced him to a sales guy, and I introduced him to another individual who is an expert in that industry. The result is I've kept a close relationship with this individual, and he continues referring people to me for the services I provide. I have another friend who wanted to start blogging. I connected him to other bloggers. I've had him write guest blog posts on my blog. The result is he's recommended me to other clients. He's sent people to my training classes. He's even made introductions for my job-seeking daughter. Now, I did it because it was right. He needed help. He wanted to get his blog off the ground. I helped him. There were benefits to doing so. When you make these connections, do it because it's the right thing to do. Try to help other people. Don't just do it for personal gain. However, realize that by making these connections, you're going to create possible new opportunities for yourself. Referring work to other consultants or service providers has a lot of benefits. You create value for your clients by sending them to a qualified supplier. You can earn referral fees from the firms you refer work to. You build relationship equity with your other partners, and they may refer work back to you. You also build a reputation with your clients as the first person they call when they have a problem. That gives you the first shot at being their solution. You can have different arrangements for your referral relationships. You can go the full contractual route, where you have a legal document that specifies the terms of the relationship. The other end of the spectrum is going with a handshake. I'll look out for you, you look out for me, and we'll send business back and forth. Choose the structure that best suits the type of relationship you're trying to build. Screen your referral partners. It can hurt your reputation to send someone who's bad to one of your clients. Make your services complementary between your firm and the firm you're referring work to. I have a couple of different situations where I'm referring work to other firms. In one situation, we're a provider of training services. The other firm does consulting work. There's not an overlap between our services. I send him clients who need consulting. He sends me clients who need training. We have a relationship with another firm that's a technology firm. We don't do technology. Anybody who needs technology solutions, I send them to that organization. And when those people need training services, he sends those clients to me. Be careful though. Sometimes these relationships work out, and it's awesome. Sometimes the relationships don't. If you find that the relationship is getting too one-sided in favor of the other party, you can and probably should stop referring work there. Also, protect your asset. That asset is your client network. Bad partners can poach your clients. Bad partners can create relationship issues for you and your client. Partnership arrangements can be an awesome way to grow your business. Just do so carefully and think about the type of relationship you want with your referral partners. When you're self-employed and running a consulting firm, all your expenses related to running the business can be tax deductible, but you can only deduct them if you track them. Mileage to client meetings, meals when you travel, phone and utility bills, equipment, and home office expenses can add up to big dollars. Mileage is the most overlooked. The per mile rate can be over 50 cents a mile. At 4,000 miles a year, that's $2,000 worth of expense. If your marginal tax rate is 30%, that's a $600 a year savings. That's real money. Get advice from your accountant as to what you can or cannot deduct. Build a good record-keeping system. If you don't record these expenses, you could be paying a lot more in taxes than you should. There are plenty of apps available for expense and mileage tracking. You can also track these expenses in your personal financial software. And make sure that you keep the hard copy receipts. Your clients definitely need receipts if you're getting your expenses reimbursed. And don't forget to charge your clients for mileage, as long as it's in your contract. Expense management can be a total pain. It's boring to do. But when you look at the value that it can generate and the money it can put back in your pocket, it's totally worth it. Consulting can be a boom-bust cycle. When you're on a project, things are great. Cash is coming in the door. But when the project ends, you may realize you haven't been selling. There are no projects or revenue in the pipeline. That's a terrible situation. Structure time every week for sales activities. I recommend 15 to 20% of your time being blocked for selling. And block that time on your calendar. Hold yourself accountable to performing those sales activities when it comes up on the calendar. there are a few tips you should keep in mind as it relates to sales activities. Create a tracking system for your leads. You can use lead tracking software or something as simple as a spreadsheet. I like to use calendar reminders. I set ticklers on my calendar for my selling activities. When I talk to a prospect and they say, "Hey, we're not ready, Mike, give us a call in 3 months," I will put a calendar appointment on my calendar to call that person in 3 months. And when that appointment shows up, I pick up the phone. My calendar makes sure that I'm driving sales activity. Keep your sales files organized. I have a separate folder for each of my client prospects. Every time I have an interaction, an email goes into that folder. So I always know the last conversation we had, even if it was 3, 6, or 9 months ago. Every time you read an article or a great book, think of one prospective client you can send it to and recommend it to. Again, your reading will drive your selling efforts. Use LinkedIn for prospecting and track your sales conversations. Make sure you get all those sales activities in one place. It's easier to manage. When I have a conversation with someone on LinkedIn and we're going back and forth via message, eventually I will move that conversation to email so I can track those emails in that prospect folder. It's really important to keep your sales activities organized in a way that works for you. Just remember, if you're not selling, you're not earning. A brand is a consistent promise of what your clients get from you. Be sure everything about your firm is consistent with that brand. If you run a high-end firm, handing out cheap tchotchke at a conference is inconsistent with the brand you're trying to project. If your brand is a fun and exciting place to work, but your website is gray and boring, that's inconsistent. Be deliberate about defining and reinforcing your brand every single day. One thing that can be helpful is putting in place some guiding principles for how your organization is going to behave. I run a high-end consulting firm. I was previously a consultant at a firm called McKinsey, which was also a high-end consulting firm. I have a guiding principle for everything we do. I just ask the question, would McKinsey do this? I had one individual on my team who wanted to do some outbound calling efforts using a third-party firm to try and drum up business. I asked him, would McKinsey do this? And he said, no, they would never do that. I said, then we're not doing it, because I want to maintain that consistency with how my firm is perceived by my clients and my prospects. Some things you can consider about how you're going to maintain your brand. First, attire. What do your people wear? We wear blue. Our firm's color is blue. Our clients have come to expect it. I actually had one client who I had worked with for years who saw me in a red shirt one day, and he was just blown away. He said, I didn't know you had any other colors in your wardrobe. We're that consistent with our color scheme. Think about your pricing structure and your pricing levels. That needs to be consistent with your brand as well. If you're a premium organization, you should be charging a premium price. Your website and the signature blocks on your emails need to fit with your brand. When you conduct email campaigns or you use social media, think about who you're associating with. Think about the way a message is conveyed on those channels. Your documents and your deliverables that you share with clients should also be consistent with your brand. Use the same images, the same color scheme, because your clients will come to expect that. Your collateral materials like your business cards and pamphlets also have to be consistent with that brand. And finally, the office space you choose and the location you choose for your offices should also reflect that brand. The more consistent you are with your brand, the more familiar your clients are going to be with you, your services, and what you stand for. While you may want to tell all your friends, your family, your colleagues, and prospective clients about the awesome work you're doing for a marquee client, doing so might expose you to legal and financial risk. If you disclose information, you could face serious penalties and even legal action, not to mention damaging your reputation. When you share confidential information to impress prospective clients, those prospects are probably going to worry that you're going to share their information with other organizations as well. Make sure you and your team all respect client confidentiality. There are a few things you should consider related to confidentiality. Identify and secure all confidential information. This means physical and electronic security, including antivirus software, access control, and encryption of the information that you share. Let your teams know the policy on securing and sharing information. And understand your contracts and what you can or cannot share, as well as the penalties for sharing that information. If you break client confidentiality, it can create a lot of issues for your firm. Make sure you hold client information to the highest level of confidence. One of the hallmarks of a great consulting firm is that you hold your client's information to the highest level of confidentiality. There's a lot you don't know, and you probably have blind spots related to running your consulting firm. You may be unaware of exciting opportunities too. Find mentors and create an advisory board who can provide perspective to you on challenges you're going to face or opportunities you can pursue. Make sure these people bring a different perspective than you have. Their alternate view will help you see things you might ordinarily miss. I've been very fortunate to have some awesome mentors and advisors over the years. When I first started my firm, I was kind of stuck with my business model. I couldn't figure out how to make the firm grow more quickly. I called one of my advisors. I told him what my predicament was. He stepped back and said, "Mike, why aren't you hiring new instructors as quickly as you can?" It was a big insight for me. It fundamentally changed the way I was going to run the business. I have one other individual who's been a wonderful mentor and advisor to me for over 20 years. Every time I have a problem, he is the first person I call. A lot of times those problems deal with client issues. What he's able to do is get me to calm down because I'm usually pretty upset when I call him. And then he helps me take a step back, look at the problem from a different perspective, and generate some interesting solutions. He is so incredibly valuable to me and how I run my firm. There are a few really good places you can find mentors and members of an advisory board. Take a look at your business partners who also run consulting firms. They've had similar challenges and they understand the ones you're facing. Clients and prospective clients can be great advisors. They can give you that client perspective on your services in your firm. One other great place to look is retired entrepreneurs and business people. I have found they're always so willing to jump in and help and give you a different perspective. When you have these mentors and advisors, compensate them. Generally, they're not looking for cash, but a nice lunch or dinner out whenever you meet with them is appreciated. Also, don't forget them at the holidays. Mentors and advisors can be a wonderful way to generate a new perspective on your business, give thoughts on the obstacles you're going to face, and help you take your firm to the next level. A huge mistake you can make as a consultant is trying to hire away some of your client's employees or solicit business from your client's customers. Most contracts that you're going to sign with a client contain non-solicit clauses. A non-solicit clause says you cannot go out and pursue a client's employees and induce them to join your organization, and you're also not allowed to pursue a client's customers. Your client will have a huge issue with you creating a gap on their team when you try to hire away one of their key employees. Clients also don't take kindly to you selling your services to their customers. Your client has worked really hard to build those customer relationships. These are two major mistakes that you should avoid at all costs. There are situations where it's okay to hire client personnel and sell to their customers. One situation where it's okay to hire client personnel is when a senior client tells you that someone on their team is looking for work. I had one senior client approach me one day, and she told me her administrative assistant was looking for a new role. She asked if I had any room on my team for this individual. Unfortunately, I didn't, but I was able to make some great connections for that individual to help them find that new job. A situation where it's okay to pursue a client's customers is when a senior client introduces you or recommends you to that customer. Then it's fair game to open that selling relationship. If a client employee or a client customer approaches you, The best practice is to tell them that you value your client relationship, and what you'd like to do is check with your primary client before proceeding with that conversation about hiring the individual or pursuing that company as a client. Always respect your relationship with your clients, especially when it comes to pursuing their employees or pursuing their customers. When you're pricing a project, you can go with a flat rate or an hourly or daily rate. Flat rate projects can be very profitable, but if the scope expands, you could lose a lot of money. Hourly projects aren't as profitable, but if the scope expands, you can make more money because you're charging for more hours. To set the rate for a project that's going to be flat rate work, use your standard hourly or daily rate, multiply that by a basic effort estimate, and build in a cushion for scope creep as well as a cushion for additional profit margin just to be safe. Recognize some of your cushion will likely be negotiated away during the contract negotiation phase. Factor that into your initial quote. To reduce scope creep risk, break the project down into multiple phases. Have each phase have its own flat fee. If the initial phase of a project grows and scope expands, you can always re-scope the following phases and change your pricing accordingly. My firm was serving another consulting firm as a client. We were going to do a project that had 3 phases of work. We proposed only on the first phase, and we priced that project accordingly. What we didn't expect was this client was a much tougher negotiator than we expected, and the price of that initial phase went down pretty dramatically. The second thing that happened was the scope expanded much more broadly than we thought it was going to. The result was that first phase was unprofitable for us, but we learned from it. The next 2 phases, we built in more of a cushion for the negotiations, and we built in more of a cushion for scope creep. That second and third phase earned us a much more reasonable profit margin. When you're pricing your projects, especially when they're flat rate, be sure to build in enough of a cushion so that you can deal with the negotiations and you can handle the scope creep that's probably going to happen. Networking events can be great for client and partnership development. Go into these events with a strategy. One approach is to meet as many people as possible and have short conversations. Then ask if you can follow up with them after the event. Another approach is to be targeted and find a small set of people to build a relationship with. This approach does require access to the attendee list before the event, so you can do your research. Make sure your intent matches their intent. If they're looking to speed date and you want to have a long conversation, that conversation won't go well. I have one client that I'm a coach for. He was being unsuccessful at the networking events he was going to. When we discussed it, it turns out he was taking that speed conversation approach. But the people at these events wanted to have deeper conversations. He changed his approach, and what he found was he was having more meaningful connections at those events, even though it was a smaller number of connections that he was making. I was personally at one networking event, and this one individual came up and started pushing his services on me. Unfortunately, he was a plastic surgeon. I didn't know if it was because I have a big nose or something, but it was a mismatch for what I was there to do and what he was there to do. It was not a good conversation. When you're at the event, I suggest you not try and sell your services. Just meet people, get to know them. Let them know what you do. And if they're interested, then they're going to say, hey, let's follow up. I'm interested in your services. Save the selling for a future conversation. Consulting is about relationships, not one-off sales. Go into these networking events with the intent of building new relationships that you can grow in the future. A lot of consultants have a tendency to use an excessive number of buzzwords in their communications. Their emails, reports, websites, and social media are full of them. I suggest you avoid buzzwords at all costs. They're confusing, and they can come across poorly to your clients. Speak and write directly. Say what you mean. Stay away from phrases like at the end of the day or leverage. Your ability to speak and write clearly will actually differentiate your services. Now, there's some fair criticism of me and my firm using buzzwords. The name of my firm is Thought Leaders. Now, out of fairness, I chose that name back in 2004 before it became a buzzword. By the time it did become a buzzword, I had built a strong brand with my clients, and it would cost me more to change the name of the firm than deal with a slight negative perception about us using a buzzword. That said, I'm sensitive to it, and I deal with the joking that I hear from my colleagues and my clients. With buzzwords, you've got to be careful. I've heard some consultants who sound like, well, we should pivot our strategy so that at the end of the day, we can fully synergize and optimize the human capital assets that have been allocated to the organization. That sounds awesome. What does it mean? It doesn't mean anything. The more buzzwords you use, the better you may sound initially. But when clients review your work, they're going to find it difficult to understand what you're telling them to do. They might take your recommendation in a different direction than you intended. Please avoid buzzwords as much as you can. Speak directly, tell your client what you want them to do, and you're going to get a better result in the end. Attorneys are expensive. If you involve one every time you write a contract, you're going to run up a huge legal bill. Instead, have your attorney draft you a standard services agreement you can use with all your clients. Have sections related to your project as separate schedules that you can customize for each project you do. It'll save you time and money every time you negotiate and sign a contract. Standard services agreements should contain pricing and payment terms, the contract term and termination provisions, warranties and liability, confidentiality, indemnification, ownership of deliverables and intellectual property, insurance requirements, and a statement of work for what you'll deliver to the client. If your client has a standard agreement, use it. It's easier to negotiate and get it approved. But make sure you review every provision in that contract, especially the ones that impact you, and negotiate changes in them as necessary. At my firm, we provide training services. Something that's very important to us is intellectual property rights. A lot of times, client standard services agreements state that the client gets ownership of our intellectual property. Obviously, that won't do for me. We always negotiate the terms when we see that provision in a contract, and we get it changed to reflect that we continue to own our intellectual property. Standard services agreements are a great way to save money and be more efficient in your contracting process. Just recognize that there will be times it's going to be more appropriate to use your client's services agreement instead. Requests for proposal, or RFPs, can be time-consuming efforts. They can create great opportunities for you to win additional business. Many times I've found that the client has already made up their mind as far as who's getting the contract. They're just using the RFP process as leverage in their negotiations with the prospective winner. Before responding to an RFP, understand whether or not you really have a chance of winning the business and choose to propose accordingly. I have one organization that put us through a proposal process. It was for a one-day training course they wanted us to deliver. The RFP they sent us was 45 pages long. In addition to that, they wanted us to find 5 of our clients to serve as references. To serve as a reference, I needed to ask those 5 clients to fill out a 5-page reference form. I respectfully told this prospective client that we were not going to submit to the RFP. I made that decision because it was going to take us more time and effort and also put a burden on our existing clients to win a piece of business that wasn't that valuable to me. I've been in another situation where one of our largest clients conducted an RFP process. We had worked with this client for several years. This was definitely a situation where we were going to propose. What it helped us do was solidify our position with that client, even though there was a lot of effort that went into preparing the proposal. RFPs can also create great opportunities to land big contracts and become a preferred supplier. I'm not saying to never submit to an RFP, but I am saying you should carefully assess the value of submitting that RFP and going to all the trouble of pulling your proposal together versus the value of spending your time on higher probability sales efforts. As a consultant, you're going to run a lot of meetings. People can be disruptive in meetings. If you're facilitating a session, it's easy to lose control of clients, especially when they're trying to hijack the agenda. Here's some of my favorite techniques for regaining control of an out-of-control meeting. You can use a parking lot approach. A lot of times, people just want to be heard. They may bring up a point that's a big concern to them that isn't really relevant to the meeting. Create a space on a whiteboard or on a flip chart and just write parking lot. When somebody brings up one of those points, go over to the parking lot, write it down, ask the person, have I captured your concern? And when they say yes, say that's great, we can come back to that later, let's get back to the agenda. People then know they've been heard and they can release that concern. Another way to regain control of a meeting is changing your physical proximity to the person who's trying to hijack the meeting. If you're standing up and facilitating a session and all of a sudden somebody gets a little bit chatty and they're starting to run their mouth too much and take over the meeting, what you can do is close the physical distance between you and them. The effect this has is it reduces the amount of space that's available for that person to take up with their comments. And as you get closer, what you'll find is eventually they'll quiet down and they'll let you regain control of the meeting. Another technique is to refer back to the agenda. If somebody brings up a point that's not on the agenda, just say, that's a great point. That's really interesting. Can you help me understand how that point is related to the point of the agenda that we're covering right now? When they say, oh, it doesn't really relate, you have the option of writing it down in the parking lot or saying, can we come back to that later and get back on track on the agenda? You can also use people's names to get their attention and get back on track. If you have a few people who are arguing in the room, pick one person's name, usually the most disruptive one, and call their name and ask them a question. That can sound like, hey, Joe, that's an interesting point you're making right now. What I'd like to do is get us back on track with the agenda. So let's see how that point you're making ties to what we need to be talking about now. When Joe hears his name, all of a sudden it pulls him out of that argument for a moment and gets him to pay attention to you. The last technique you can use is calling for a quick bio break, telling everybody, hey, we've been at this for a while. Why don't we take 5? Everybody take a bio break and then we'll come back. When they come back, it gives you the opportunity to reset the agenda and point out where we need to pick the meeting back up. All of these approaches can help you regain control of a runaway meeting. Get comfortable trying them out in safer situations. Maybe try them out in your internal team meetings and see how they go. Figure out which ones are most comfortable for you. The more comfortable you are with these techniques to regain control of a meeting, the more effectively you're going to drive the meeting outcomes that you desire. Life is great when you're on a consulting engagement and the cash is flowing in. But you need to know the warning signs for when your engagement might be coming to an end. Here are some of the most common warning signs I know of. When your executive sponsor leaves the organization, your engagement is probably going to end within 30 to 45 days. I served one client for about a year. My executive sponsor left the organization. 30 days later, that engagement terminated. When you start seeing other consultants working in adjacent areas at your client organization, that's a hint your engagement might be ending soon. Sometimes your clients will ask you for copies of your data, copies of your models, and even instructions on how to use them. That's another hint the engagement might be closing. Clients might ask you for billing summaries or for invoices of work to date. That's another indication that the engagement is coming to an end. Last, you may see diminishing returns in your work, especially when it's things like executive coaching. When you feel like you're not adding as much value anymore, you need to think about ending that engagement. You should know that the engagement will be ending as quickly as possible so you can plan your next engagement and not be surprised when the cash stops flowing. Working from home sounds awesome. A lot of my friends tell me, oh, you're so lucky you work from home. Working from home can be extremely challenging. Dogs, kids, mailmen, landscapers, salespeople, and a lot of other interruptions are going to disrupt your workflow. There are also a lot of distractions when you work from home. Are you going to work on the client presentation, or are you going to put up the holiday decorations outside because it's a nice day? Or maybe that couch is calling your name for a nice Tuesday afternoon nap. Working from home can be lonely too. You're not interacting with coworkers. Contact is limited to email and talking on the phone. Know the downsides of working from home before you go down that path. Some things that have helped me work from home include creating a dedicated workspace. When you have that dedicated workspace, let your family know. Hey, when I'm in the study, I'm not here, I'm at work. Consider hanging a no soliciting sign or a sign that says, don't knock, I'm on a client call on your front door to eliminate those distractions. Take your pets to daycare or hire a pet sitter when you have a lot of client calls or documents to work on. Invest in a good set of noise-canceling headphones. That'll help with the landscapers outside. Schedule specific projects on your calendar to overcome the temptation of putting up the holiday lights or taking a nap. Hold yourself accountable to following the calendar. Schedule time outside your home office for coffee, lunch, sales calls, and client meetings. Go out and interact with people. Working from home is really great. Just make sure you understand what you're getting into before you do it. Some people see the world as zero-sum. If I win, you lose. Others see it as expanding, and there being more opportunities that come from working together versus going things alone. I suggest you take the latter approach as you run your consulting firm. If you approach things as zero-sum, you might close off relationships and miss opportunities you could otherwise participate in if you saw the world differently. I love when I run into people who say, oh, you do leadership stuff and I do leadership stuff, therefore we're competitors, instead of seeing the world as a bigger opportunity if we work together. One individual wanted to come and be a trainer on my team. When we started talking, he insisted that any training he delivered would have his brand on it. I said, I don't understand how that's us working together and creating a bigger pie. We decided not to work together because he saw it as zero-sum. I have another person who wanted to become an instructor, and he said, I see a lot of value from us working together. He saw his content and understood he could sell that training. He also looked at what I had built. He said, wow, I can learn how to build better courses. I can take advantage of the infrastructure you've put in place. I'm able to now sell additional courses that I don't deliver on my own. He really saw how the world was going to expand from both of us working together, and I saw similar benefits. We've worked together for several years now, and it's been very productive. When you feel that competitive defense mechanism kick in during a conversation with someone, stop and ask yourself, what space exists that both of us could benefit from if we had a relationship together? That will help you see the situation differently, move out of that zero-sum space, and figure out how you can create new opportunities that both of you will benefit from. When you're running a consulting firm, time is your most valuable resource. Manage your calendar rigorously. Practice time blocking. Stack meetings and calls together so you have bigger work blocks available to work on other things. You can do this by asking people for possible meeting options and then select the option that's best for you. I found several techniques that help me manage my calendar well. I like using color coding. When I have client work, I color it green. When I have work with my partners, I color it pink. When I have family things, I color it blue. Just a quick glance at my calendar tells me exactly what I'm in for that day. I like racking and stacking my appointments. When I have a bunch of coaching calls, I will schedule them one after the other after the other. What that enables me to do is be very efficient with those calls, and it frees up other time that I can work on other tasks. I suggest scheduling like work with like work. I'll schedule all my coaching calls on one day. I'll schedule all my sales calls together. I'll schedule all my content development together, because it's very different types of energy when I'm doing some coaching versus when I'm selling versus when I need to step back and be reflective and be creative for content development. Say no to distractions. A lot of people will try to get on your calendar. If it's not a priority, it's okay to say no. Figure out what type of work works best for you at a particular time of day. For example, I tend to be more creative in the mornings, so I'll schedule content development time in the morning. I tend to have better energy for sales in the afternoon, so I'll schedule my client calls in the afternoon. It's also a better use of scheduling that afternoon time because my clients are typically around. Every minute you waste is a minute you're not billing your services. Teach your teams these principles as well so they can be more efficient with their time. Time is a precious asset as a consultant. Manage your calendar accordingly. When it comes to consulting work, I like to say I've never had a single good idea. All the good ideas have been my clients. While I may have generated the idea, I like to have my clients come up with it through me asking the right questions. When it's their idea, there's a higher likelihood it'll be implemented because they feel ownership for it. A consultant's job is client impact. If that means giving clients credit for good ideas that get implemented, then that's what matters. You may have concerns about taking this approach because there may be a perception that you're not adding value. There are a few ways to overcome that issue. Be hypothesis-driven. Have a perspective on what you think the answer is. Think through questions you could ask to get the client to arrive at that answer. Share initial hypotheses with key client stakeholders. Then they'll know it was your original idea, but let the client team members generate the insight. Give credit to client team members for coming up with the idea. The sponsor knows it was really your idea in the first place. Point out implementation success after the engagement, and remind the client that they didn't know the answer before you showed up. If you can create a situation where the client comes up with the answer and then implements it, that's the hallmark of a successful client engagement. When you run your own firm, it's tempting to micromanage and not take risks. Your team will never grow that way. Teach your people the standards. Set clear expectations. Then get out of their way. If you hired well, they'll do great work and help you grow your firm faster than you can grow it on your own. While they might make some mistakes along the way, there's much more upside to setting them free to perform. Several years ago, my firm put on a conference where all my instructors were going to give a presentation. My initial reaction was to get in there and tell them how to present and what to present. But I took a little of my own advice here. I took a step back and I said, hey, have a great time out there. They blew me away. They did amazing work. And yeah, a lot of it was different than how I would have told them to do it. But that was the power in the firm. I have another instructor, and when I brought him on board, I decided I was going to sit in and observe the first class he taught. While he was teaching, the whole time I was sitting in the back of the room saying, I would have done that differently. Ooh, I wouldn't have said it that way. Oh, he really needs to change this. What was interesting is at the end of class, when I got the scores from the participants, his scores were better than mine normally were. I learned something that day. Different doesn't mean it's wrong. There's a lot of power in different. Let your people be different. Let them do the work how they're most comfortable doing it. Some ways they can get over this discomfort and get past micromanaging are things like asking what the possible downside is. What's the worst that can happen if you set this person free? If they do make a mistake, how can you recover if that mistake happens? Ask what the upside is if they succeed and they do a wonderful job. Will you have better retention of your people? Will you have more excited people? Will you get more out of the team? Will the client get more from that work? If it seems like there's going to be a positive expected value from setting this person free, and if there's minimal risk to you taking that approach, then go ahead and try it and see what happens. You'll likely end up with more excited people who are doing better work for your clients. Co-working spaces and coffee shops are great places to work and meet with other people. But if you want everyone in there to hate you, you should do the following. Take up the best table all day. And by the way, only order one beverage. Look, they're running a business too. You're depriving them of resources like that table. Take a bigger table than you need and spread your stuff out. I saw a guy doing his taxes one time and another woman doing her expense reporting. Again, you're denying other customers the opportunity to use that space. Be sensitive to them. You should talk on the phone incessantly. We want to hear how important you are and how big that deal is that you're working on. Look, you don't have to prove that you're some titan of industry by talking loud on a call. Also, when you talk on the phone, you may be violating client confidentiality, or at the very least, violating professional courtesy by sharing things about the person you're talking to. Listen to your music or watch a video with the volume all the way up without your headphones. We don't want to hear your favorite tunes or watch you watch the latest action movie trailer. Bring your headphones. Be respectful. The bottom line when it comes to co-working spaces and coffee shops is be considerate of others who are trying to get their work done around you. Be respectful of their needs and also the needs of the owners of those locations. A little courtesy in these situations will go a long way. Clients will always want you to do more work for no additional pay. Scope creep is a real challenge. Getting scope right, specifying it in the contract, and holding clients to it is required if you want to run a profitable firm. When clients do request scope changes, don't hesitate to refer back to the original scope document. Then explain how much more work the new request is, along with the cost of that change. I had one client where we were going to do a training course, and after the course, we were going to provide team coaching. After we got done with the course, the client changed their mind. They said, we want individual coaching for the people in class. I said, that change is going to be an incremental 40 hours of work. By the way, here's the cost of the change. Please sign off on this before we take that coaching approach. And they signed off on it. We made sure we were getting paid for the additional work we were doing. Some tips you can use to manage scope are: first, be rigorous about estimating scope at the outset of your project. Put a scope change approval process into your contract. Specify scope change rates and get them approved during the contracting process. Concede some smaller scope creep items, but when you do, highlight to the client that you're varying from the contract and that future changes won't be free. As a consultant, you have to manage scope rigorously and make sure you get paid for those changes your clients want to make. There's no shortage of professional groups or associations you can join. Chambers of commerce, industry associations, certification networks, and other groups like these will all tell you the benefits of joining them right before they ask for a big membership fee and a time commitment. Be logical in how you review these opportunities. Our local Chamber of Commerce wanted me to renew my membership. They said it's an extra $700 a year. They said you'll get a disc with all the names of our chamber members and you'll get invited to some networking events. I said, well, I'm not really interested in those things. I'd actually like to do one of those networking events where I can present at it. They said, well, that wouldn't be fair to the other members who hadn't asked for that speaking slot. But that was the one source of value that I wanted. I didn't renew my membership. It wasn't worth it. One of my clients is currently saying that I personally need to get a professional certification to continue a specific type of work I'm doing with them. That certification will cost me hundreds, if not thousands of dollars in certification fees. Plus, I'll have to spend a lot of time getting that certification, time I won't be billing clients. When I look at how much work I'm going to lose if I don't have that certification, I can't make the economics of that choice make sense. So I've said, no, I'm not going to get the certification, and I understand I'm going to lose that part of the work. Know what you're getting into, what the benefits are, and what you'll get out of these relationships before you pay the fees. Make a good, calculated choice about joining these groups and associations, and that you're going to get the payback that's required to make it make sense for your business. Unlike a corporate job, a retirement plan isn't automatic when you run your own consulting firm. That said, there are many savings vehicles out there like individual 401ks and other accounts geared toward entrepreneurs. Learn what they are, set one up, and contribute regularly. A common one is the individual 401k. The rules currently allow you to contribute about $18,000 a year plus 25% of the net income of your business, up to a total cap of $54,000. That's a lot of money to grow tax deferred. Check with your accountant or financial advisor to see what you might be eligible for. Also, build a solid cash cushion. When a consulting engagement ends, it's not always clear when the next paycheck is going to come in. Have sufficient reserves to get you through those thin times, and invest when you're above that reserve threshold. I personally keep 4 months of cash on hand and invest anything above that amount. There's no big company out there looking out for you. You've got to take care of retirement and financial planning yourself. A big question you need to answer is if you'll offer implementation services. Most consultants don't. They usually generate recommendations and leave it up to the client to implement and execute the idea. If you do provide implementation services, know it's a different type of work than core consulting. It's much more like having a full-time job. While the money can be good, you need to understand exactly the type of work you're signing up for. When you're doing implementation work, it's time intensive. That takes time away from selling activities. Consider only doing implementation 3 or 4 days a week. Save 1 day for running your business and selling your services. Consider an hourly or daily rate for implementation services. Implementation tends to have more scope creep, and a basic consulting engagement is going to be very different than those types of services. Also know, when are you going to extract from the implementation work? It could be a project go live, it may be a specific date, but know when you're done implementing the idea. Ask yourself, is this the kind of work you're going to enjoy doing? It's horrible to hate running your own business, but that could be the result if you're not careful about the services you offer. Implementation services need to be a deliberate choice. Spend time thinking it through before you sell those services to a client. Are you building a lifestyle business, or are you building your legacy? Lifestyle businesses are great. You can achieve a good work-life balance and make a solid living. But once you wrap things up, not much is left. If you're building a legacy business that will survive your involvement, be prepared to invest more time, money, and effort, but with an expected payoff of having built something enduring that continues to operate and grow after you leave. You don't have to answer this question when you start your business, but you should think about it at least once a year. Ask yourself the following questions. What are your goals for the business? Do you want it to survive you? What's your exit strategy? Are you going to sell to a buyer or sell to your partners? Or are you going to just shut it down? Is your legal structure one that enables you to sell your business when you want to and how you want to? Are you a sole proprietor, a C corporation, or an S corporation? Ask your attorney and accountant for advice on the best legal structure for you. What kind of investment will it take to build a legacy business? How much time and money is going to be involved? Who's going to lead the business when you leave? Do you have a succession plan? Make a deliberate choice between running a lifestyle or a legacy business and set yourself up for the future you desire.